to bring back Lebas, who, as I'd mentioned, did forecast 55,000 jobs lost. And what's your initial reaction, Guy?
Well, my initial reaction is this is largely, in many respects, as expected. But there's one thing that sticks out that's pretty positive, and that's a continuation of these average weekly hours at 33.2 hours. So that's the second month we've seen 33.2 hours, and we're probably going to see firms start to re-employ temporary or part-time workers before they start hiring aggressively, and we're going to see it first in that number.
First in that number. And what about the temporary worker situation? What positive can you get out of that?
Well, I think that refers back to the seasonal hiring factor. We saw a number of temporary workers hired seasonally. That suggests maybe the seasonal hiring was a little bit shorter in duration. Firms were a little bit uncertain about what form of holiday spending we were really going to see from consumers this year. And I think now that we have a little bit of stability, we have these temporary workers, probably going to see some stable increases. Those temporary workers shift into full-time jobs over the course of the next 2 months or so.
And yet you can't deny, though, Guy, that the headline number there of 85,000 jobs lost, we thought we were just getting out of that. We've come back down again. I mean, it's not as much as we've seen in the months past, but does that signal to you or indicate that perhaps this recovery is going to be a lot longer, a lot rougher than we thought?
Well, I think the biggest single risk we see to the economic recovery now is the risk of employment and joblessness feeding back into consumer spending. And that's a serious problem, and we saw it just 2 days ago when the Fed released their minutes from their last meeting. They're very concerned about that, too. However, it's really our base case expectation. Employment is something that's slow and takes a long time to change, so we're going to see, a few more months of some positive, some negative job losses before we really turn the corner into consistent growth.
Right. Well, what I mean, though, Guy, is that if you see 85,000 jobs lost in the month of December, that maybe perhaps increases the risk that we're going to see further losses in the monthly jobs report. And does that mean then that spending takes a whole lot longer, of course, to come back?
Well, absolutely. And one of the unique features about this recession is the massive number of job losses like this one in December that are occurring even when other conditions seem to be turning a little bit positive. So these job losses are really extending over a longer period, and it certainly does have the ability to turn sentiment, but I'm going to focus on a couple positive notes in here. Again, the continued relatively high, at least compared to earlier in the year, average weekly hours, and the relatively high level of temporary hiring. I think really focus on those two as the positives out of here.
Okay.